Yeah. Okay, Silverbirds Rhythm 93.7. Today is Tuesday, the 16th of April, 2020. I've said this many times today. But anyway, it comes with the territory. So this the time about now is 9:34 a.m. I have with me in the studio Mr. David Akpobaro. Good morning, glad to be joined us, David.
Good morning, I'm happy to be here.
Okay, and David is, I want him to introduce himself specifically and what he does, because today we're going to be looking at Forex trading and how it works. Okay, David.
All right, thank you very much. My name is David Akpobaro. I am a Forex trader part-time and also a consultant and also a mentor to aspiring Forex traders. So I'm here to discuss about Forex trading and, give you guys an insight on how it works.
Okay, very important. So what exactly is Forex trading and how does it work?
All right, Forex trading, as we know, Forex is short for foreign exchange, and it's a platform where we buy and sell currencies at a certain market level, and the gain is to make profits as we buy or sell. So the whole idea of it is, let's use Nigeria for context. So let's say you buy dollar at the rate of 1,900, and you sold it at the rate of 1,700. In this case, now you lost about 200 naira.
Okay.
So the whole essence of Forex trading is for you to buy at a lower rate and sell at a higher rate. So we have several tools we use to measuring this and way to predict the next particular movement of the market.
Okay. Without mentioning any platforms or platforms and brokers that you use, what's the difference between you and the BDCs, the Bureau de Change guys at Gaia Rumola? What's the difference between you guys?
I mean, there's a massive difference, right? Because we are not. So basically, this is how it works. Yeah, we deposit in our accounts, right? When we deposit in our accounts, we look at the charts, and when we look at the charts, we want to predict the next direction. So we have different instruments that we trade. But before we go into the instruments, to answer your question, we are not the same. So basically, what we do is we do not even trade. I don't advise to even trade the naira to dollar because it's so volatile. So when we're looking at currency pairs, we're looking at things like Euro USD, GBP USD, and the rest. So they are more stable. So we predict, we anticipate price direction, and we make money off it.
Okay, very, very clear. So how is trading Forex different from trading stocks or trading crypto?
All right, that's a good question. I get asked this a lot, and the difference is this. So when we're looking at Forex pairs, we're looking at currencies, unlike crypto and stocks. So crypto, we're looking at, we have things like Bitcoin, Ethereum, Solana, and the rest. So the whole idea of stocks is you're buying units of a company's portfolio. So the idea is this: you do your research on a company. You believe that, okay, the company is worth investing in. You buy stocks or shares of the company, believing that this is going to appreciate. And bear in mind, stocks are more a long-term investment. It's not something that you deposit and you want to make money in the next 24 hours. Crypto, basically, is almost the same thing, but crypto, you can also play short-term. So we know that Bitcoin is on the ridge right now, and a lot of people are buying Bitcoin because of the halving season that's coming. So at this rate, so if you had bought Bitcoin when Bitcoin was like $37,000, right now you should be smiling at at least over 100% return on investment on your Bitcoin on your account. Yeah, exactly.
Okay, but I understand what you mean clearly. So what does it mean to trade on a margin in Forex? We're talking about Forex now.
Yeah, this is usually a very confusing thing for newbies because they find it difficult to understand. So we are looking at margin, they work hand in hand with leverage. Okay, so before now, it was almost impossible. It was impossible for you to trade Forex with $100, or $500. You had to have big money like 100,000, 1 million, that range.
Okay. So
what brokers do is that they give traders like an allowance. So we have leverage, and in leverage we have 1:100, 1:200, 1:500, etc. So what this leverage means is this: let's say you have a 1 to 100. So what it does, it multiplies that 100 by your $100. So let's say you have a $100 account, right? And use a 1 to 100 leverage. So what you have, basically, you have 100,000 units to trade with.
Okay.
Do you see that? So that gives traders an allowance. Okay. So when we're looking at margin now is basically is the minimum that is required for traders to place a trade. Okay, because the margin, like I told you, margin and the leverage, they work hand in hand. Okay, you cannot want to, go all out on a small account. Your margin won't let you. Okay, so this is the way brokers used to regulate this and to control, you just blowing up your accounts and all of that.
Okay.
Yeah.
How important is patience and patience in this forex trading business?
You know what? I say this a lot because I've been trading for over 4 years now, and my first year, second year, third year, my first and second year basically was awful because you're still learning, you're still in the heat of the moment, you're believing you're going to make money, but it doesn't always work like that because let's say you have a trading setup, you have to wait to see that setup, okay? Because if you want to go all out aggressive, you're going to lose money. Trust me. You have to be patient. And I think it's very important. A lot of people do not understand this because, if you have 5 days in a week and you don't see your setup Monday, Tuesday, Wednesday, just that Thursday that you see your setup, you can make the money that you didn't make this rest of the day. So I think patience is very, very important, in learning Forex.
Okay. So let's talk about currency pairs. What does it mean? Give us an example, please.
Okay, thank you. So currency pairs, we have different currency pairs. We have Euro USD, we have the GBP USD, USD JPY, AUD USD. So we have different currency pairs, and these are the instruments that we trade in the Forex market. So what the...
So you avoid Naira USD not even this.
Honestly, I don't want to advise make you trade them because, like I said, it's very volatile. Like, okay, so we saw Naira fall to an all-time high of what was 19 thereabout, and now Naira is trading at 11. So anybody that bought Naira at 19, you can imagine how it's crying right now. Some people are even in debt. So, I mean, I feel like this it's very, very volatile. I don't think personally I don't even check that chart. I don't even check it because
You avoid it.
I avoid it.
Okay. So what are the best times to trade in the forex market? Is there anything like that?
Yeah, there is. We have Forex times, and we have different sessions. So we have the London session, we have the Asia session, we have the New York session.
Okay.
So in Nigeria, I always see that Nigeria is very, very favored in terms of Forex time zones because the time zones fall perfectly for us. So we have the Asia session. This is usually around...
We usually start in Asia first.
Yeah, yes. This in our time, the Asia session is around from I think 11 p.m. to around should be 6 a.m.
Okay.
So London is around 8 a.m. to 3 p.m. The New York session is around 1 p.m. to I think 9 p.m. So London and New York are the most volatile, are the best times to make money. That's when the big banks, everybody's putting money into the forex market. There's lots of liquidity and all of that. So and the time falls perfectly in Nigeria time because around this period to afternoon, it's a very, very good time to trade. I think Nigerians benefit a lot from the forex market.
Okay, so let's talk about news and global events. Because just recently we heard Iran is they attacked Israel. Obviously, it will affect the price of crude, Brent crude, and all that. Is that also affecting the forex market?
Yeah, definitely. As a forex trader, we have 3 types of analysis. We have the fundamental analysis, we have the technical analysis, and we have the sentimental. So looking at news events fall under the fundamental analysis.
Okay.
So what this means is that these are situations or things that influence the global currencies.
Yeah.
So but let's look at the war that's going on now. This is going to influence the US market in the sense that there's a lot of people are going to be buying gold. People will be buying gold because they see gold as a safe haven. So when the dollar is like crashing, people are going to be investing their money in gold, and this is going to be dropping, the dollar. So when traders are not looking into the forex market, what they'll be doing now, they'll be buying currencies against the dollar. So something like GBP USD, people will be looking for longs. They'll be looking for buys in GU because understanding how this news event is affecting the market, you want to be you want to be trading in favor of the opposing country. So that's it.
Very, very key. That.
Mm.
Okay, but we understand that. Okay, so you talk about Euro USD,
Yeah.
GBP USD, Australian dollar versus all that. Okay, so let's talk about tools or indicators. Which one do you recommend for a beginner in forex trading?
Yeah.
Plus, how long should one learn?
Okay, good question. So personally now, I do not use any indicators anymore. Or as a
No
beginner,
Fibonacci thing, no.
no, not anymore, because we use these things at the first second year. We lost money. We lost money. So it's not like they don't work, but if you start trading forex, you depend so much on it because you feel like you need to see a particular pattern before you take a trade, and it takes time. Like forex takes time for you to learn, and depending on your consistency, right? So what our advice is this: if you want to start as a beginner, the two indicators I would advise: one, the moving averages, because moving averages, they help you to determine the trend. And secondly, probably the RSI, because it could help you, like if the RSI aligns with the trend, it could help you take position. So those are what I would advise. But it's always good to understand price action. It's very, very important.
Which ones do you use?
So I trade smart money. I'm a smart money trader. So basically, what I look for is liquidity. So what I teach is liquidity. So if you're in my classes, you will know that there's some things I look for. So I'm looking for where the money is at, because there's some items you see on the chart that helps you determine, okay, this is where the money is sitting. So I like to target where the money is, and a lot of traders, especially newbies, will find this very, very confusing, because what they understand is support and resistance and trend lines and all of that. But based on experience, it's good to have all those knowledge, because at the end of the day, those knowledge are what you use to advance your trading skills.
Are there people that are full-time forex traders?
Yeah, definitely.
In Nigeria?
Yeah, we have big people that are full-time. I mean, it's a good career, but I always advise that it's good to have, as a trader, it's good to have other things you're doing, because as much as you can make money from forex, you
can also lose money.
You can lose money, and it's good to diversify. Especially if you're made a decent amount of money. Just put it somewhere. Start another business. Just have different streams of income is very important.
Okay, that's a very good piece of advice. So, how much does one need to start trading forex now? $100? Some say $200.
So this is a very good question. The truth is, you don't really need a lot of money. You can start trading forex as low as $50, even 10, because the idea of forex is not for you to become a millionaire overnight. The idea is for you to trade consistently, because if you can, understand your strategy, know when to take positions, that's the main thing. Once you understand that you can take a $10 account to $100, you can take a $100 account to $2,000. It's just about understanding risk management. It's very important. So you can start with as low as $50.
Okay. I know. I saw. I don't know how true this is. I watched online some time ago. The guy, that kind of trading he does doesn't exist on the platform that are very popular here. He's in the UK. He makes 50p 1 or 2 days. He doesn't rush. Once he makes 50p, he goes to sleep.
Yeah.
Then he makes another 50p. That's £1, and then as in 2 days he has made £1. So in 5 days he's made like £2.5 or £2.50.
Yeah.
And he was trying to educate us, saying that in his own style is he's not looking for the big fish. He's looking at consistency, and he does this pip thing.
Yeah.
When he goes up by a pip or something, he just sells and buys, and that's it. He's done for the day. He goes around doing his thing, goes to follow Liverpool or anything. He will not disturb himself until the next day. So he's patient, he's not in a hurry, he doesn't want to hammer. But that's by the time he gathers his money at the end of the month, he has maybe £5, £10, and he can take care of himself with his basics. Then if he wants to increase that, but basically he's trying to build an attitude and a character around it.
Yeah, definitely.
So he doesn't get greedy.
Yeah, discipline.
That's the proper word, sir. So how that takes us to the next one. How important is which one is pips in forex trading, and why are they important?
Okay, so pips. So what this is like the SI unit for trading. So what pips
Okay.
stand for, points in percentage.
Hmm.
So pips is basically how you measure the movement of charts. So
Okay.
let's look at Euro USD. So it goes up and down. When it goes up and down, it moves in pips. So
Okay.
as a trader, if you enter a position or you make a trade, so if it's going in your favor or against you, it's moving by a pip. So this is where risk management comes into place. So let's say you have $1,000 account and you're willing to risk 10%. Let's say you're willing to risk 10% of it. That is $100, right? So, and you enter a position that a pip will cost you $10. So if it moves against you by $10, you're going to lose the $100. Do you understand? But if it moves in your favor by 10 pips, 20 pips, 40 pips, you're going to be making money in that progress. So if it moves in your favor by 10 pips, you're making $100. It moves in your favor by 20 pips, you're making $200, 30 pips, like that. So pips is the way we measure our profit or loss.
Okay.
And it's also very important for
What about stop loss?
Yes, thank you very much. So stop loss, they work hand in hand. So let's say you enter a trade, you put your stop loss, let's say 5 pips below or above your entry. Okay, so what this means is that you're willing to lose. This stop loss is the amount of money you're willing to lose in this trade.
$500 in this case.
Yes. Like I said,
Because it's 5 pips now.
yeah. So it depends because there's something we call lot size.
Okay.
So there are different types of lot size. Let me just mention the common ones: standard, micro, mini. So the standard lot, what I'll use for this example now, standard lot is 0.1.
Okay.
So what 0.1 means is that you're willing to lose about I think $1 per trade.
Okay.
Okay. So if it moves in your favor or against you, you'll be losing $1, you'll be gaining $1. So let's say you have a 5 pip stop loss. If it moves against you by 5 pips, you're losing $5.
Okay.
So if it moves in your favor by 10, 20, 30 pips, you'll be making such an amount. So another important thing is risk to reward, because if you have like a 5 pip stop loss,
Yeah.
I would advise you to have a 10 pip target. Because in that case you're making twice of your loss. Okay, or let's say you have a 3, just multiply your stop loss, just multiply by 3 or by 4, whatever. So if you have a 5 pip stop loss, be targeting 20 pips, 30 pips. And why I say this because if you, let's say you have a winning trade and you make about $50 and you have 4 losing trades in a row, you'll still be in profit because your risk to reward is decent. So if you have another winning trade, you should be able to make up for it. So
I smell it. Okay. If you're just joining us, this is the Started Up Show, and I have my guest in the studio, David at Obaro. He's a part-time Forex trader. He's been in the game for at least 4 years. How many losses have you had so far? Any laughs?
I'm not going to count my first and second year because I had losses.
So why did you persevere?
So this is something I really saw potential in, because I found out this thing during Corona.
Okay.
Or shortly before Corona. So we were at home for months. So I had a lot of time to learn this thing. So I was always checking it. I was always so persistent about it. And funny enough, when there was coronavirus, people were still making money from Forex. So even though you lost your job or you were at home, you still be making money if you're a Forex trader. So it was very important to me. So I took it very, very seriously. And even after I lost so much, my first, second year, I was like, people are making money from this thing. There's no
legally.
Yeah, people are making money legally. There's no holy grail to it. I need to understand how people are making money. I need to know how this thing works. So I kept on pushing. So it all clicked when I finally had a mentor. I had a mentor in UK. So I paid him a certain amount. So he taught me the way he trades. That is the smart money. So that's how I became confident and the trader I am today.
So this smart money is different from all the
Yeah,
generic things that are out there.
Yeah, it's a concept, right? So there are different trading strategies. Like it just depends on your strategy. I don't condemn any strategy. You feel me? So the smart money is just my own strategy. I like it. It works for me.
It works for you.
Yeah, it works for me. But if you're into trend lines, break and retest, indicators, and if it works for you, that's fine too.
Okay, I understand what you mean.
Yeah.
Off air, I'm going to ask you the broker you use and, of course, the tool, the trading tool you use. But before I round up, what else do you have to tell people finally? If someone wants to start now, where do they start from?
Yeah, well, I'll advise people that, you know, if it's something you believe in, it's something you should actually try, because, you know, you will not know what happens if you know what happens if you don't try, but you never know what happens if you do try. So it's very important for you to be persistent. And if you see yourself losing all the time, just understand that it's part of the game. Like, it takes time. So if it takes about 4 years for you to get your BSc in school, why do you think it's going to take you 2 months for you to learn Forex? You know, it doesn't work like that. So you have to actually take your time, understand it. Don't be in a hurry to make money, because it's a lifelong skill. And once you do learn it, you're going to make a lot of money. So
there are a lot of people who stay on demo accounts for some time.
yeah.
But the real world is different from the demo world, right?
Yeah, honestly, demo is the same condition. The only difference is psychology, because, you know, there's a different feeling when you're losing real money.
Now when you're losing,
There's a different feeling when you're losing real money. So when you're losing your demo account, you know, you don't really attach too much emotions in it. You know, it's like, okay, I will just, what is there? But, you know, if it's a real account, you know, when you see minus $10, minus $100, be like, wow, this is my real money, this is my hard-earned money. So
I get you.
I think psychology is more of an issue in Forex than the strategy. Because you can have the perfect strategy, but your psychology is going to, like, you know, mess you up.
I get. Some people say they can do better with their money than with other people's money. That if they trade their money, they can do it well. But when they cut other people's, while if it come, because of that, I mentioned psychology.
Yeah.
The fear of losing other people's money.
Yeah, actually, you know, I have a lot of friends that always ask me, can they give me 5 million? Can they give me 1 million? Let me trade for them. And, you know, I actually did this thing sometime last year. You know, I took about $500 from 10 different people. I had a $5,000 account. I was trading for them. I was paying them every month. So the pressure was becoming too much. You know, at the first month I paid them like 90,000. Second month I paid them like 40,000, because I told them that this is Forex. I cannot promise you a particular return on investment every month, but what I can promise you that you can get, you know, something. So I will be paying them. So after the fourth month, I'm like, you know what, guys, all of you take your money. I'm not doing this again. This is disturbing me. You guys should just have your money back. Let me just focus on my thing. If you want me to teach you how to trade, then you can sign up for my mentorship. But if you don't want me to teach you, I cannot collect your money to trade. I don't like it.
I understand what you mean. Okay, thank you very much, David Obara, for your time and also for enlightening us. A lot of people have had their fingers burned, so they don't want to hear. People don't want to hear the message. It's important.
Exactly.
You've been doing it for 4 years. You've been successful, and it is legal. Big congratulations to you.
Thank you very much.
Okay, so stay tuned. That's pretty much the package of today's edition of the Started Up Show on the Rhythm. At 10 o'clock, it'll be time for the news. For now, music.